Alright, guys, at this point, it's unbelievable. Just when you think the world can't get crazier, it just did. Now, we are moving to a world where the dollar is becoming trash and it's going to get harder to accumulate real wealth. Now, we have been warning about this for years, and now, under Trump, the US is triggering the endgame. Trump is now punishing the imports of gold, which is true money, by the way. In addition to that, the US bond market has massive cracks. And if you think bond yields can't go any higher, well, here's a nasty update for everyone. The 30-year bond auction went poorly and that sent yields higher to the moon. The 30-year auction is important. It's a signal of how investors see the long-term viability of US debt. Is the return good enough? Is the underlying asset, which is paper dollars, attractive enough to hold? Apparently not, and that's why demand is cratering. Long-term investors, they are saying no. But let's go one step further. How about the granddaddy of all US bonds? And if there's one auction we must watch, it is the 10-year. It controls mortgage rates, credit card borrowing, consumer loans, virtually everything. Now the problem is even that duration is being shunned. Scott Bessent's auctions are collapsing. The 10-year auction result also went very poorly. Yields hit 4.25% and demand fell far short of expectations. The problem here is how yields have stayed over 4% for 3 years. The damage on the national debt is stacking up, and it shows how Bessent is indeed trapped. He's not issuing any new net on net 10-year bonds. Everything sold is just to refinance the existing notes that are expiring, which means there's no choice but to slam rates down on the short end of the curve, which means Trump will force the Fed to slash rates so that Scott Bessent can borrow more money selling 1 month bonds. And that's how desperate things are becoming. Now we have to get a little technical here because it tells us the final state of the dollar. It's probably going to drop lower because the debt is unsustainable. Now just 2 days after the auction results, guess what? Yields went even higher than the results. What happened then? More tariff threats from Trump on India and BRICS, isolating the US economy even further. The 10-year is now above 4.28%, higher than the recent auction. Meanwhile, the 30-year has gone higher as well, nearly at 4.9. And all this is coming at a time when US consumers, they're experiencing all-time high prices. It's a double whammy, guys. Now your mortgage costs more at the same time. Buying a new fridge and stocking it up is just so expensive. Where are you going to find the money for groceries? The issue with economics is how foreign policy and geopolitics is boomeranging back on the US economy. Now, the financial markets are being buffeted around because Trump wants to maintain US dominance, and it's not me saying this. Scott Bessent just admitted this on air.
Alexander Hamilton, who was the original tariff man, used tariffs for two reasons. One, to fund the government. Two, to protect U.S. industry. And now President Trump is using tariffs as an instrument of foreign policy, and he is putting secondary tariffs on India for buying Russian oil.
But understand this flywheel of stupidity. When you tariff the world, you piss off many countries who are actually your customers. So they're going to buy less stuff from you, and this will hit back at US jobs and unemployment starts to creep up. This isn't good. Then you have tariff revenue being siphoned away from American consumers, the American people, to the federal government. And the amount isn't nearly enough. So borrowing more money has to be done. This week alone, the US Treasury is going to sell $100 billion worth of 4-week bills. That is an insane amount of money that Trump needs to keep Washington going. It's the highest ever since 2023. So how is the tariff war really going, guys? It's forcing Bessent to borrow even more money, and he's betting for the Federal Reserve to cut, which means the dollar is going to slide down in the months and the years to come. The big problem here is how the amount of borrowing is going to increase. It will snowball to the point that one day, even rate cuts won't be enough to push yields down, and that's going to be the end game everyone is afraid of. Now, before 2020, US borrowing for short-term bonds were more or less controlled, around $40 billion per category. But now things have gone off the charts. It is out of control. It is at least $60 to $80 billion now, almost double. Doesn't matter if it's the 1 month bill or the 12-month bill, borrowing is being forced up, and sooner or later, all the rate cuts in the world will be ineffective. And this is going to lead to a horrific result where the national debt just spirals out of control. And because all the supply of dollars will be locked in the US, guess what this does to prices? Prices also goes up. And let's look at this from both the macro and the micro level, because on the whole, the standard of living is about to collapse. Actually, it is already in crisis mode. This is the PMI charges for goods and services in the world. Now, the higher it is, the more expensive the standard of living is. Now, we can see how the trade war is playing out. Since 2025, look at the divergence of prices in the US versus the world. Now, we have inflation for US consumers just spiking to the moon, and that's what happens when you slap the world with tariffs of 20% or more. Meanwhile, the blue line indicates prices for the world and it's heading down. Why? Because countries are buying cheap inputs and supplies from BRICS. More specifically, they are buying from China. And this is what we see when we zoom out. Prices are heading up, rates are still high, and the dollar continues to fall. And this is how the tariff war is really playing out. It's all in the numbers, guys. But let's zoom into the everyday situation of someone in the US. And guys, it's not looking good. I'm already feeling the pain where I am halfway across the world, and I can't really imagine the fallout happening in the States. Now, listen to this disaster. According to a leading poll, 53% of people in the US say that grocery costs alone were a major source of stress. And this makes total sense when you think about it. Now, Trump has placed big tariffs on food exports to the US, so foreign imports, vegetables, fruits, coffee, they all cost a ton more. At the same time, he wants local farmers to produce more, but all their input costs have gone up. So they have to push the cost down, they have to transfer the additional amount down to the consumer. And across the board, consumers are revealing their greatest stress points. Besides groceries, we also have housing as well. The amount of savings is in crisis, salaries are in trouble. The cost of healthcare is another point of stress as well. And all these are direct result of the tariff war plus endless government spending. The financial panic we are talking about earlier has spread to Main Street. It's affecting people's grocery bills now. But according to Lutnick, everyone in the world is paying the tariffs except Americans. It's really bizarre, but it's worth it to really remind everyone of the level of intelligence on Capitol Hill.
And let me tell you who the experts are. Donald Trump and his trade team have proven the EU pays, Japan pays, Korea pays, Vietnam pays, the Philippines pay, Indonesia pays. And the list, by the way, we did like 5 deals. Donald Trump solved a war between Thailand and Cambodia.
Now, if you're the average person, especially in the US, you want to protect your wealth, plain and simple. You know the dollar is going down and the stock market is really a house of cards. So you buy gold. Well, even that import is going to face brutal tariffs, which are literally insane. It doesn't make sense. It just makes prices go up. Now, once again, Trump just shocked everyone. He has imposed big tariffs on imports of 1 kilo gold and 100-ounce gold bars. And as expected, gold futures in the US surged to a record high. Now imagine that, putting a tax on real money is like he's denying the US people from buying affordable gold. He wants to shake down gold investors there for money. It's literally unbelievable. And there's a big problem with this. Yes, it only affects the bigger bars right now, but it will trickle down to jewelers and smaller coins as well. Now demand for those will go up as well. So if you're looking to buy physical gold in the US, like from Switzerland, be prepared to pay 39% higher. It's outrageous, and I can bet you premiums on gold eagles will also climb higher eventually. Now, mark my words, guys, if gold tariffs are enforced, the smaller coins and bars will get clobbered as well. There's no escape. Meanwhile, the futures of the US gold market, the future, is now in very big trouble. Look at the divergence between US gold futures and the spot price of gold. It is at least $120 higher, and this throws a big spanner into the works. Now just think about it. If you're a gold investor, especially a whale, you have a ton of money. Why would you buy gold from COMEX at such a disgustingly high price when you can get it elsewhere? Now there are a boatload of other countries like Singapore, Hong Kong and Dubai where you can get gold at near the spot price. You can get physical gold without paying Trump's tariffs. And here's the crazy thing, even Scott Bessent knows the importance and the value of gold, and maybe that's why the plan is to isolate Americans from affordable gold.
Gold can't have a fiscal problem. Gold cannot have a gigantic budget deficit. Gold cannot have the a war. So just the fact that it is this isolated thing makes it very interesting. And the fact that the entire global trading system, until Richard Nixon took us off, was tied to gold.
And I don't know about you, but if I'm the US, I would be placing a few orders now before the tariffs go official. Even if it doesn't, I mean, it's an insurance hedge. I can't imagine paying even 10% more on top of existing prices. Which kind of leads us to the ultimate end of the US gold market. I'm not saying it won't exist, but it will just be a window for Trump to tax US gold importers and investors. It will stop playing a big role in the global gold system. Setting paper prices will get harder, and guess who will be the big winner here? It's going to be China. Now, in 2024, the US imported $16 billion worth of gold, and look at where the supply came from: 28% from Canada, 13% from Switzerland, 7% from Australia, so on and so forth. With the tariff slap on US consumers, demand is going to crater, not just from investors, but from jewelers and the diamond district. So tell me, Sherlock, where will the gold flow to? Guys, it's going to flow to China. The Chinese will be more than happy to soak up all the supply, and they might even get a slight discount to boot. And that's how self-defeating the gold tariffs are. And that's why today's economy is truly broken. Trump is writing his own rules, and all of it, not some of it, all of it doesn't make sense. So if you're still clinging on to the old world order and your economics textbooks, they are useless. Nothing makes sense anymore, and it's best to embrace this reality. The clown show is not over yet, not by a long shot. But let me know what you think. Will the US bond market eventually break? And why is Trump shaking down gold investors? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.